Brent crude is back in crisis mode. Prices have rocketed towards $120 a barrel in just days, reviving comparisons with the oil shocks of the 1970s as traders scrambled to price in what a prolonged disruption in the Strait of Hormuz could do to a market that now burns roughly 100 million barrels of oil a day. Hello and welcome. You're watching Explained by NewsX. I'm Uday Pratap Singh. Today we are going to be talking about the big question. Could Hormuz trigger an oil shock bigger than 1973? Oil prices have surged to multi-month highs, with Brent crude oil jumping nearly 29% to cross the $100 per barrel mark as the war involving Iran, Israel and the United States of America enters its 10th day. The prolonged disruption of shipping through the Strait of Hormuz has intensified fears of a global energy shock, with analysts drawing parallels to the oil crisis of the 1970s, when crude prices soared about 300%. At the center of the panic is a single choke point. According to the U.S. Energy Information Administration, roughly 20 million barrels of oil and petroleum liquids move through the Strait of Hormuz every day, equal to about 20% of global consumption and more than a quarter of the world's seaborne oil trade. Most of those barrels flow to Asia. China, India, Japan and South Korea together take well over half the crude passing through the strait, meaning any sustained disruption would hit Asian economies first and hardest. That risk has been amplified by a viral chart from the Kobisi letter, a market newsletter which warns that a complete shutdown of Hormuz could trigger the largest oil supply shock in history. The scale is staggering. Roughly 20 million barrels per day of oil supply would theoretically be at risk. To put the scale in perspective, the Yom Kippur War of 1973 removed roughly 4 to 5.5 million barrels per day from global oil markets. The from global stock markets. The Iranian Revolution of 1978 to 79 disrupted 5 to 6 million barrels, and the Iran-Iraq War in the 1980s curtailed about 4 million barrels daily. By comparison, a total shutdown of Hormuz could theoretically put 20 million barrels per day at risk, far exceeding any single historical disruption. In raw volume terms, a full Hormuz blockade would dwarf each of those shocks, but there's a catch. The 20 million barrel figure is a worst-case ceiling, assuming every tanker crossing the strait is suddenly stranded. In reality, some shipments would likely continue, and regional producers such as Saudi Arabia and the UAE can reroute limited volumes through pipelines that bypass the strait. Strategic reserves could also cushion the blow. Still, even partial disruption could send prices spiraling, and for oil importers like India, the damage would come primarily through price rather than physical shortages. Let's break down what exactly happened in 1973. The comparison stems from the 1973 Arab-Israeli War, during which Arab members of the Organization of the Petroleum Exporting Countries imposed an oil embargo on countries supporting Israel, including the United States, the Netherlands, Portugal and South Africa. The embargo came in response to the Richard Nixon administration's decision to supply military aid to Israel. The move banned petroleum exports to those nations and included coordinated cuts in oil production. At the same time, OPEC pushed foreign oil companies to raise prices and increase revenue sharing with producing countries. The impact was dramatic. Oil prices jumped 300% from about $3 per barrel to $12, as roughly 7 to 9% of global oil supply was suddenly removed from the market. The shock is widely regarded as the most severe oil crisis in modern history. It was followed a few years later by another surge of about 180% after the Iranian Revolution disrupted Iranian oil output. Why Iran remains crucial for global oil markets? Well, today's oil prices are far higher than in the 1970s. The pattern of market reaction, though, remains similar. According to a note by Aquarius Securities, Iran's influence of the oil market is not just about production volumes. Although Iran contributes a relatively small share of global supply, its geographic position gives it significant leverage. The country sits along the Strait of Hormuz, a narrow waterway through which roughly 20% of global oil supply and a similar share of LNG trade pass. This choke point is also the main export route for crude shipments from Saudi Arabia, Iraq, Kuwait and the UAE. Because of this strategic position, even the risk of disruption in the region can push oil markets sharply higher. Historically, oil markets have tended to reprice aggressively when geopolitical tensions threaten critical supply routes, even when physical supply losses are not immediate. Oil prices surged sharply amidst the escalating conflict. Brent crude briefly touched $119.46 per barrel, while West Texas Intermediate crude oil climbed to around $119.43 per barrel. The rally pushed global oil prices above $100 per barrel for the first time since the 2022 Ukraine crisis. The Strait of Hormuz remains effectively closed to regular tanker traffic after multiple attacks on vessels in the region. The narrow shipping lane connects the Persian Gulf with the Gulf of Oman and the Arabian Sea, making it one of the most critical energy transit routes in the world. While the administration of Donald Trump has maintained that the strait remains open and has offered to ensure vessels passing through it, markets appear unconvinced that shipping will remain safe. So what about India? Well, India imports nearly 85% of the crude it consumes, leaving the economy exposed to global price swings. Research from the Reserve Bank of India suggests that a 10% rise in crude prices can push inflation higher and shave growth in the short run. If Brent's surge towards $120 proves temporary, the shock may remain manageable. But if the rally extends into a 20 to 30% sustained spike, economists warn the ripple effects could run through inflation, fiscal balances, and financial markets. The deeper vulnerability is structural. The global oil system has effectively concentrated a fifth of its supply through a single narrow shipping lane with limited redundancy. If that artery were ever fully blocked for an extended period, the supply shock could exceed anything seen in modern energy markets. What could happen next? Well, analysts say the oil market now faces two broad scenarios. If the Strait of Hormuz reopens and shipping flows normalize, crude prices could correct sharply as the immediate supply shock fades. However, if disruptions continue for several weeks, oil prices could climb further until demand destruction sets in, triggered by rising inflation, tighter financial conditions, and slowing global economic activity. The real question now haunting traders is not whether the risk exists, but how long the Strait of Hormuz stays vulnerable and how high prices will have to go before the world finds out where the shock's ceiling really is. Joining us live is Major General Rajan Kochhar, defense expert. We also have Bipin Sharma, political analyst, live with us. Dr. Sharat Kohli, senior economist, joins us live. Dr. Manan Dwivedi, foreign affairs expert, is with us as well. Let me make a start with you first. Major General Kochhar, clearly, of course, this is this is getting very prolonged. We still don't know what the future of the conflict looks like, but one thing's for sure, the oil prices are rising steadily. The economic ramifications are palpable. Is the world ready for this?
Thank you, Uday. So first I want to compliment you on the wonderful opening narrative you've given, because the entire discussion has been given a perspective. And it is very important because this perspective is extremely important for the viewers to understand. The first important aspect is that is the world prepared? I don't think it's prepared. You see, something in management, I studied the VUCA cycle. So this is something like VUCA happening in the world today. The concepts have changed to Bani now, but the ultimate thing is volatility, uncertainty, complexity, and ambiguity. So once you try to analyze this from a management point of view also, you will understand the world is not prepared. And why it is not prepared, I'll just qualify my statement. Because your dependencies are so large and you are an interconnected world today. Because it's not only the Gulf countries, Russia, Venezuela, so you have limited sources of supply. And your main routes run from here. If you remember, about 2 or 3 years back, there was a problem in the Red Sea. And a similar kind of, how the Houthis were targeting the ships which are actually going to the Suez Canal and all that. And Panama Canal also, there was a crisis some time back. So all these things are indicators to tell you that it's an interconnected world. So if anything happens, somewhere you gave the analogy of 1973, that was just a very small kind of impact, because this impact is going to be very much larger. Supply chain resilience, I would like to come to. What are the alternatives available? Saudi Arabia has a pipeline from the Red Sea, and UAE has a pipeline from Fujairah. But that is only around 3.5 to 5.5 million barrels a day. The requirement is 20 million barrels a day, as you rightly mentioned. So in case you have to sustain that, you have to have alternative sources, though Fortunately, Russia has played up to the equation now, and as far as I you visualize, oil is not going to be an issue. The issue is going to be LNG. Issue is going to be gas. Already the price of the gas cylinder has gone up by 60 rupees a cylinder, and also the larger context, the agriculture sector also gets affected because of sulfur, potassium, which actually comes from here. Though the sowing season is far off now, so I think that's a saving grace, that the immediate impact of agriculture will not be felt. So, in my overall assessment, I would like to say that this is not a permanent, long standing war like the Ukraine war. This is not going to last long because the impact of all the countries, the tremendous pressure on the world, including the USA. So, I visualize that give it another 10 to 15 days, the ammo will run out. Missiles are not infinite. The interceptors are not infinite. So they would have to declare a logistic pause if not an end to the conflict, because many times we have to undergo a logistic pause also to carry out replenishment of our own capabilities. So I think that the time for the logistic pause is only a few days away. And my last point is that America has announced an aid of $151.3 billion to Israel. Basically, I want to highlight this point here is because Israel is getting 1,200 pound and 200 pound bomb casings. So, in the next course of days, we are going to see the intensity is going to shift from the Americans to the Israelis, because they have not been able to achieve the kind of the objectives they had actually set themselves for. So ultimately, and even let me tell you,
Yes.
even after 10 days, these objectives are not going to be achieved. So I think some kind of negotiation, some kind of this thing, I'm optimistic. So I feel that will happen, and we will see the end of the war.
Sharad Kohli, how much is this oil shock really going to be? Because Dr. Kohli, at the end of the day, the prices are rising, but the shock is only going to get bigger with each passing day, isn't it? How significant is this shock going to be? What kind of impact will this have on the economy as well, the global economy, but various countries' economies in particular who stand to be hit the hardest? How much are we already suffering due to the war?
Good evening, Uday, to you, my fellow panelists and the viewers. At the outset, I would like to, express my, I would say, appreciation for General Coach's optimism. I've done 12 shows since morning on various platforms. He's the only speaker today who's spoken with optimism that this will probably not go on forever. So in Hindi, they say, "Aapke muh mein ghee shakkar." I said, "Aapke muh mein halwai ki dukaan," because he's the only person who's done it. Well, for now, I think nobody knows better than our respected defense expert that war is a very evolving process. Every hour is a new hour, and every day is like a new birth. You don't know what's in store for you tomorrow. I agree that the ammunition and the arms and the missile stock is not unlimited. It's definitely going to run out sometime. But my concern here is, as you rightly said, Uday, each passing day is becoming a pain as far as our economy is concerned. We saw 60 rupees being increased on the LPG, and there's a lot of furor in the parliament and outside the parliament. The common man, when he feels the pinch, you feel that the war has reached your kitchen. As far as petrol, diesel is concerned, the next common man issue. I mean, I'm trying to address the common man issue first, because it's about $110, $120 swinging in that. My own reading says that if this lasts for another 7 to 8 days, and oil holds on to over $120, I think the petroleum marketing companies like Hindustan Petroleum, Bharat Petroleum, Indian Oil, and some of the private companies, they will have to take a call on their bottom lines. Based on their bottom line, they may have to pass on some of the price increase to the people, unless, of course, government decides to reverse and neutralize the effects by way of reversal of excise or VAT. well, that the chance seems unlikely. And of course, if it comes in GST, then the problem will be solved to a larger extent. But that's not going to happen that soon. But for now, I think this is definitely adding to our fiscal pressure. Our import bill is heavy. 87% of the oil is what energy is what we are importing as of now. And my worst fears are that oil, chemicals, paints, fertilizers. My fears are on fertilizer because there is energy being used for farmer product, which is fertilizer at this point of time. And if fertilizer gets expensive, it's going to shoot up that because that's a very vulnerable section of our society, of the economy, the agriculture. So each passing day, as far as I'm concerned, look at the impact. Why forget the impact on the stock markets today? Look at what's happening to the stock markets. They are simply not able to absorb this because they know that all the companies into agri and non-agri sector, which are listed on stock markets, their bottom lines and top lines are going to be impacted straight away. And there's a lot of other import which has been impacted. And I was just talking to somebody on another media platform that about 200 containers of our fruits and vegetables are stuck on various ports. And in about 2 days' time, they will all lose their quality and they will have to be thrown into the sea. Now, $12,000 to $15,000 is per ton is the load of fruits and vegetables on each of these containers. You can imagine the loss, and there's a lot of supply chain which is coming from behind because it's a flow. The supply chain is a flow, so that flow is going to get disrupted. So all in all, I think not just oil, but the entire disruption in the Middle East and Strait of Hormuz can bring the whole exports to this part of the world to a standstill. And to add salt to the wound, the oil that we replace from Venezuela or Nigeria or other parts of the world, Russia is okay, but some of that oil is the Western Texas Intermediate WTI category, and I think not many people know that Western Texas Associate is an oil with a low output. It's also difficult to refine. Only Jamnagar refinery can handle that oil. The output is low, refining process is more difficult. So that is why you get that cheaper than the Brent sweet food. So I think all in all, we are in for a shock. The prices, as you rightly said, is a bigger problem for us. The supply is not an issue. We've got stock of about a month and a half to 2 months. That's not an issue. But the price rise is putting pressure on the rupee also. Now, when the rupee comes under pressure, our import bill overall, electronics, so many things, chemicals that we are importing, there's a long list of imports that we do, raw material for industry. All that is going to become expensive. So it will bring down the margins. MSMEs are going to be affected. Some of the businesses will also become unviable because sometimes it becomes so unfriendly that the businesses become unviable. The import becomes people who operate on thin margin. They are in trouble. So I think all in all, let's hope, wish and pray. And I would now pray that let General Kocher's statement come true.
Right.
So
Bipin Sharma, let me, right. Okay. Dr. Kohli, I'll come back to you. Bipin Sharma, let me quickly draw you in on this conflict now. Are we staring at a protracted war? Do we believe that, this is likely to head into a bigger, sort of turmoil than we already are seeing? Already, of course, the Gulf states, the Middle East a lot of the airspace is closed. Are we expecting that to continue? Or do you see the war theater shifting and becoming, more constrained just within Iran and Israel? Are we continuing to see a protracted war that is engulfing the entire Middle East?
So, thanks and good evening. So, very pertinent question. You see, the need of the hour is to douse the fire and not add fuel to the fire. And till the time China and Russia do not enter this war, these escalations, I think we can be optimists, like General Kocher just stated. And one has to be an optimist because war is not the solution. And as far as India is concerned, India's External Affairs Minister has made the stand of India amply clear, crystal clear, that India is all for peace and dialogue and diplomacy hold the key. And of course, if we are headed towards some sort of oil energy crisis, so that will not happen unless and until the Strait of Hormuz is blocked. And that is a distant possibility because, as I said, unless and until France and Russia, join these escalations, so that will not happen. And also the fact that Donald Trump, in his second stint as the president of United States of America, is in the news for all the wrong reasons, starting from imposing hefty tariffs then how he kidnapped the president of Venezuela. So, now these attacks on Iran, and of course, assisted by Israel, and then, Iraq also, it happened a few years ago when they said on pretext of weapons of mass destruction. But I think it's a matter of few days, and as far as India is concerned, India's point is concerned, I think India can sustain this for a month, this strategic petroleum reserves. But then if these escalations go beyond a month's time frame, then it is a cause of concern for India. That is the time when India's diplomacy has to be at its very best, and then we have to look for alternate suppliers, the strategic reserves, because in such a scenario, the geopolitical escalations, India has to look for alternate sources, and then formulate its strategy, revise its strategy, because strategy again will hold a very pivotal factor. And then not to forget that what happened during the era of Cold War, and then when US-China trade war happened, it impacted the economies of so many nations across the globe. So now I think we should just pray for peace, and then how someone can actually play the role of a peacemaker and put these escalations to rest once and for all.
Trivedi, let me also quickly bring you in here now, also in particular on the Strait of Hormuz. Is there, a possibility of Iran partially allowing it for friendly countries? That has been the talk, but it's not actually translating into open movement on ground. The maritime region is very tense, particularly what we saw happen off the coast of Sri Lanka. That has, of course, led to fissures in oil movement, in goods movement, in logistics supply as well. Manan Dwivedi, can we expect some sort of leniency as far as Strait of Hormuz is concerned, or is it looking unlikely at this juncture?
The present juncture, I would like to say and contend that United States of America, Israel, being the coalition of the willing, and Iran, Turkey, Russia, China, and all these countries being the axis of resistance, they are really going to fight hard for the Strait of Hormuz. But I think Americans and the Israelis have enough firepower. They have enough Navy accomplishments up their collars, wherein they are going to prevent Iran into completely blocking the Strait of Hormuz. And if you look at the Strait of Hormuz, it is a very critically located and a strategically located waterway which connects the Gulf of Oman with the Persian Gulf. And it carries generally around 20% of the global shipping oil trade of the world. So I think whether Iran prepared 2 years back in attrition for a war with Israel and America, or how the Americans surrounded them with their aircraft carriers and with their submarines to get rid of the Iranians, mid-get submarines. Still, I think Strait of Hormuz might be blocked by the Iranians as a last-ditch effort, as a last suicidal move, as far as the final defeat of the Republican Guards and the Tehran's regime is concerned. But still, the Americans and the Israelis have enough firepower wherein they can ensure the free passage of oil, or they can ensure a free passage of trade from the Strait of Hormuz. Apart from this, I would just like to say here that as far as the oil prices are concerned, I think if you look at the structure and the function of the OPEC, that is the Organization of Petroleum Exporting Countries, and also IAEA, that is the International Energy Agency, then both of them hold, especially IAEA, holds $2 billion of worth of oil as kind of a strategic reserve, which India also holds. So, the entire world, including India, OPEC, IAEA, and the other nations who take in oil from Russia, US, Venezuela, and Iran, they can continue on for a month or maybe 2 months. But after that, it would be a difficult task. But what I would say is that if the collateral damage thing is further expanded, if the theme of collateral damage is further expanded, then at that particular point of time we can contend that the refineries and the oil installations, they are also bound to be attacked, because Iran has also missiled the such locations in Kuwait and other places in the GCC states. And Israel has recently, if you look into an example, a current example of warfare, then Israel has also bombarded an oil refinery in Tehran, which has been pummeled by smoke and all kind of debris. So I personally feel that oil should not be the normal, brickbat to beat the Americans or the Israelis with, but it is a conjoined concern. It is a concern of the entire West Asia, where oil will definitely serve as a factor. But if we go back to India, I'll give you some statistics that around 1.6% of the Indian oil supplies come from Venezuela. Then around 7.4% of them come from some other places. And it is 42 point something percent of the Indian oil supplies come from Russia. So, since the time of the tightrope walking that Jaishankar Saab and Prime Minister Narendra Modi, they had to do between Russia and America, India has involved itself in a massive strategic exercise
Right.
to diversify its chain of